Good morning. Happy Friday. It is September 15th. Damn, this year is flying by. Good to see everybody. Welcome back to the Daily Grind. Today we're going to go over some FTX news, which is kind of crazy, and I'm concerned that it might start dumping the market, but I guess we'll have to see. I'll read it to you guys in a bit. We'll go over some other stuff, just like I guess there was a I don't even know what you'd call it, an article posted about what the banks think about crypto and stuff. So Coin Bureau actually walks us through that, which is pretty cool. And my new headset's coming today, so I don't have to keep pulling this damn wire on my neck. It's driving me nuts. It's driving me nuts. But let's see who's in the chat, and we'll go from there. Tim I Am Crypto, good morning. Andrew Masad, Rud Puts, Leo Lustig, Carl Koch, good to see you, buddy. We have Game with Smokey Dan, All Set Miner, my man, good to see you as well. Did I ever say Dumpster Fire? I don't know if I did, but hello. Steven Cicero, as always, and Slot Squash, good to see you, buddy. All right, anybody else I missed, I apologize, but let's get into this because we're not getting any younger. All right, Bitcoin 26,465. It was pretty neutral when we started. That's why I didn't start with the day, and the light's red behind me. We have Ethereum 1623, so not too bad. I mean, everything's pretty much where it was yesterday. Dogecoin 6 cents, Litecoin 63 bucks. BNB 212, XRP 49 cents. Let's check out crypto bubbles real quick. What do we got on the day? Wow, quite a bit of things are up, over 5% actually. Interesting. Atom's at 3.8. We have Engine, which is Injective, which is 4.3. Roll Bitcoin 5%. Hex 6.3. I still feel like Hex is a sham. I don't know about you guys. Let me know what you think about that in the chat. We have AXS, Axie Infinity, is 8.3% up today. Thor Chain is up 7%. What's this one? Compound 5.9%. Man, some things are pumping, some things aren't though. Weird. Ape, look at this. Is anybody invested into this Ape coin? It's $1.10 right now. I wonder if this will pop back off in the next bull run. 5.9%. I don't know. Very, very slim chances. Hex is a scam, dude. I think so too. Oh, you know what? Speaking of scams, you know what? I'm gonna have to pull that up. So you guys know how Vitalik Buterin got hacked or whatever, his Twitter. There was a video this morning when I typed in crypto news to see what was going on in the space. There was a video with a QR code on the screen, and it says it tells you all this bullshit and scan it, right? If you scan that, it's going to steal your information, or it's going to I'm just gonna find it. Give me a second. Let me look for it. Hold the phone. Let me look for it over here, and then I'll bring it up. But yeah, I don't know if it'll do like a SIM swap, because I think you need like the permission from mobile to do that. But the what's it called? Like, they'll end up getting into your stuff somehow. I don't know how the hell they even do it, but the QR code will just enable everything. Where is it? I want to show you guys, because it's super important for you guys to understand that this shit's really, really bad, and it can really F up your stuff. Oh, they might have removed it actually. It's not on my watch history anymore. That's weird. I had a bunch of stuff here. Let me see if this is it. I don't think it is. No, this isn't it. Yeah, no, they must have removed it. I reported it, so they must have removed it already. Well, that's good. That's a good thing. I just don't want you guys to get scammed, and I took a screenshot of it. It's on my other computer. I can't show you now, but I'm gonna throw that into another one of those videos that I did the other day. So yeah, please make sure you guys don't ever scan QR codes that you don't know what they are, or any type of information. If they're on a website, if they're told to you to do it in a YouTube video, like most YouTubers like myself, I'm going to blur out the QR code when I show it, so you cannot scan it. But please, just be mindful that scams are freaking everywhere today. It's absolutely absurd. Anyways, let's check out the Fear and Greed Index, and then we'll get into this. We're looking at 45. Fear, pretty much the same. Pretty much the same as it was. Exactly the same as it was yesterday and last week. All right, let's check out top 10 coins by coin market cap, and then we'll go for there. Bitcoin, Ethereum, Tether, BNB, XRP, USD Coin, Lido Staked, Ether, Cardano, Dogecoin, and Solana. Litecoin is still in 15th, and Shiba jumped back over Wrap Bitcoin, which is nice. Not that it really matters, but anyways. All right, let's get into this. I'm sorry, I'm gonna blind you guys, because I think actually no, yeah, it's probably bright on your screen. I turned my brightness all the way down to 0 on all my screens, so my eyes don't hurt. But it might still look a little rough to you guys. But anyways, FTX gets court appeal to sell billions in Bitcoin, Ethereum, and Solana. This could be pretty rough. Depending on if the big money guys like BlackRock and all them aren't still consolidating to the point, or like that, which they have been. If they buy this shit right up as soon as FTX sells it, then we won't really see too much in the market happen. But if they don't, things are going to come down, at least in my opinion. It says the collapsed exchange's new management now can sell billions of dollars of Bitcoin, Solana, and other assets. I'm gonna blow this up so you guys can read it with me if you'd like. Collapsed digital asset exchange FTX was today given the green light to sell billions in crypto assets by the judge overseeing its bankruptcy proceedings. Judge John Dorsey on Wednesday approved that the defunct crypto brand can now sell 3.4 billion in Solana, Ethereum, and Bitcoin. That is so much like money just in general. It's crazy. Other assets at the U.S. Bank Court for the District of Delaware. So it goes on to say, where is it? The company's plan for offloading the assets, first outlined in August, will appoint Mike Novogratz Galaxy Digital as the investment manager overseeing the sale. According to the plan, FTX will cap its selling at 100 million worth of tokens per week, a limit that could be increased to 200 million on an individual token basis. Judge Dorsey will allow FTX to raise its weekly maximum if the company gets written authorization from the court, but a footnote on the order clarifies that sale of Bitcoin, Ethereum, stablecoin, and the redemption of stablecoins will not count towards the 100 million weekly limit. Calculation of the limit will also exclude transactions made to bridge tokens from non-native blockchains back to their native networks. FTX quickly and unexpectedly went bankrupt last night. Yeah, bullshit. There was a bunch of BS. If you guys don't know, FTX is the exchange that collapsed and stole a whole bunch of people's money. So apparently, I don't want to read this whole thing. Where did it say it? It said it somewhere that this is where they were. Oh, you know what? That's really the end of it. I think it was here. Where is it? Billions of dollars in customer cash disappeared, and now the exchange's new management is now working to pay back the creditors. So that's what I wanted to, that was the main point here. So at least they're going to try and pay back some of the money that people lost, which is a good thing, right? Selling these assets will help plug the hole, which originally stood at 7 billion. That's crazy. So hopefully anybody that got caught up in this FTX bullshit will get some sort of money back. Crypto World over here is actually going to elaborate on this a little bit. So let's hear what they have to say. If you guys have any questions, just at me in the chat. Real quick, Nerd Beast, let's see what he says. It said the Solana that FTX has mostly locked until 2028. They will sell SOL, but not all at once. It will be a weekly selling. The dump may not be as bad. Who knows? Yeah, so I mean, but $100 million dollars. Did it say a day or was it a week? Hold on, let me see. What did it say again? Weekly. 100 million weekly, but that's a lot, dude. That's a lot of money. That's a lot of money dumping into the market. Like, I don't know. That's a shit ton. I don't know. We'll see. Again, we'll see. It depends if the big guys buy it up. I have a feeling the big guys are just going to buy it up, so I don't think it's going to be a problem, but we'll see. Not financial advice. All right, let's get into this. Crypto World. Shout out to them. Links are in the description if you guys are interested. At me in the chat if you have questions. Let's do it.
Today, FTX gets court approval to sell its crypto assets. The founders of bankrupt crypto hedge fund Three Arrows Capital get banned from doing business in Singapore for nearly a decade, and Anthony Georgiades of the Pastel Network weighs in on recent developments in crypto. Welcome to CNBC's Crypto World. I'm Jordan Smith. Crypto prices moved higher this morning as investors made sense of a ruling in the ongoing FTX bankruptcy that temporarily led to sell-off concerns earlier this week. We'll give you the latest on that in just a second, but as of noon Eastern, Bitcoin rose to around $26,700 and Ether traded around $16.34. XRP traded 2% higher at 49 cents, and it's joining other altcoins like Solana and Polygon's Matic token, which also made gains. All right, let's get you caught up on the top stories. FTX just scored court approval to sell billions in crypto assets. The bankrupt crypto company said the move would allow it to repay customers in US dollars and minimize risks tied to price volatility in crypto markets. In a Monday court filing, FTX said it owns nearly $3.5 billion in crypto, including more than $1 billion in Solana, $560 million in Bitcoin, and nearly $200 million in Ether. And now yesterday, the bankruptcy judge overseeing the case says the firm can now sell up to $100 million in crypto per week. At the same time, the judge allowed FTX to increase the liquidation pace up to $200 million per week, pending sign-off of the two creditor committees. FTX can also now enter into hedging and staking agreements that will let the company reduce the risk of volatility and earn passive income on crypto assets like Bitcoin. The official committee appointed to represent FTX customers in the bankruptcy supported the crypto exchange's request, along with a committee that represents non-US customers with deposits on its international exchange. According to this court filing, FTX hired US crypto firm Galaxy as an investment advisor, partly to manage the risk that information leakage would lead to short-selling activity and sharp declines in the price of crypto. Next, speaking from Singapore today, the co-founder of Ethereum, Joseph Lubin, told CNBC Asia that, quote, clear heads will prevail as the SEC continues to dispute with crypto firms in court over whether tokens are considered securities. Lubin, who is now the CEO of blockchain technology company Consensus, also explained why he believes Ether is a commodity and not a security, despite SEC Chair Gary Gensler saying that most cryptocurrencies, other than Bitcoin, are securities. You might remember during a House hearing back in April, Gensler refused to say whether Ether is a security.
I've said Ether is a commodity because the SEC said Ether was a commodity, and the CFTC said the same thing on multiple occasions. And even Gary's indicated that he feels that many tokens are securities, although they really need to be demonstrated to be that. He can't just make that pronouncement. Gary has, in fact, been offered many opportunities to speak publicly about how he feels about Ether, and probably because the SEC in the past declared Ether not a security, I don't think he feels comfortable saying something like that. So I stand by my conviction that Ether is a commodity.
And sticking with Singapore, the country's financial regulator has issued a 9-year ban against the founders of Three Arrows Capital, prohibiting them from operating in the region. The Monetary Authority of Singapore, or MAS, announced today that Su Zhu and Kyle Davies won't be allowed to perform any regulated activity or take part in the management of any capital market service firm. They're also prohibited from becoming a substantial shareholder in those firms. MAS says the prohibition comes after it reprimanded Three Arrows in June of last year for, quote, providing false information, among other things. Three Arrows Capital was once a $10 billion Singapore-based crypto hedge fund that filed for bankruptcy in July of 2022 after a plunge in prices and risky trades left it unable to repay lenders. In a news release, MAS said the regulator, quote, takes a serious view of Mr. Zhu and Mr. Davies' flagrant disregard of MAS regulatory requirements and dereliction of their directors' duties. MAS will take action to weed out senior managers who commit such misconduct. All right, back to FTX's crypto asset sale for our main story. I spoke with Anthony Georgiades of the decentralized platform Pastel Network on the impact for crypto investors. He also weighs in on the shakeup at Binance US and what it means for the industry.
All right, so let's talk about FTX off the top. Bankruptcy court just is going to let it liquidate its crypto assets so it can repay customers. We're talking about $3.5 billion in cryptocurrencies here, with the bulk of that being Solana, Bitcoin, and Ether. We did see Solana trade lower immediately after that approval for the sale, but it bounced back. So my question is, how much will this sale affect crypto markets in the short term? And is this ultimately something that investors should be watching or concerned about?
Definitely. Well, I think the way that they've actually established the guidelines of the sale have provided a little bit more confidence to the market than we otherwise would have suspected. Obviously, they have a $100 million weekly limit in terms of assets that they can sell. To clarify, that doesn't include Bitcoin or Ethereum or stablecoins, which have a much higher overall daily turnover and volume. Also doesn't include certain transactions that might happen if you were to bridge a token from a non-native blockchain to the native blockchain, swapping it back to be able to liquidate. So I think the guidelines have been set up and established in such a way to limit the overall market impact. They also brought on Mike Novogratz from Galaxy as an advisor to really assist. And obviously he has a history in both crypto investing, but beyond that, in the public equity markets and futures markets, really on trading execution and overall hedging. So I do think that all of these tactics should shape out to make this as smooth as it really could be, and to fill a bit of that large hole that FTX is still seeing. Now, that being said, the overall position in Solana is relatively large. 16, 17% of the outstanding market cap is effectively supply that could come into the market. Right now, we're in a period in time, especially with people who are a little bit more risk averse, given both the monetary policy and some of the broader regulatory concerns. So, I do think that we will continue to potentially see price pressure on both Solana as well as some of those more illiquid tokens that are coming onto market.
Some of these tokens, notably SOL, are locked in vesting periods through the contracts with Alameda Research. So there will be some time before we actually see the sale of these assets. But is that ultimately good news for stability of Solana's price, or is that bad news as people sort of wait for that eventual sale?
Mm-hmm. Mm-hmm. A combination of both. Markets, generally speaking, are relatively efficient. Pricing in certain periods. If you have obviously a public equity and you have lockup periods that are expiring, the market is pretty acute in being able to price in some of the potential supply dynamics that might hit the market. Crypto markets and digital asset markets, while they're more efficient than they were several years ago, they're not as efficient as some of the larger market and asset classes around the world. So I don't necessarily believe that those aspects of it are fully priced or baked in to the quote unquote underlying price of SOL itself. That being said, doing it this way is effectively
he's definitely reading his answers. You can see him reading it.
most prudent way to really offload this particular amount of supply to the market itself. Obviously, for every sale, there needs to be an equivalent buyer on the other side to negate some of the broader price pressure.
The other headline I want to get your take on is what we were covering yesterday, which is Binance US is cutting about a third of its workforce. Their CEO is leaving the company. What's your reaction to the changes over there, especially because they say that this will help set the company up for the next 7 years of financial stability? Do you see that stability for this company, especially given the regulatory environment?
Mm-hmm. Mm-hmm. There's a lot of uncertainty right now with Binance and Binance US, particularly given some of the regulatory crackdown that we saw in the last several months.
Actually, you know what? Maybe he's not. Maybe he's not. He's just probably thinking. I don't know.
Current action, while it's been posited as a quote unquote strategic move to preserve cash and resources, and to an extent, I definitely think that it's aligned with the current market environment. The amount of money that they deploy on customer acquisition strategies, sales and marketing, influencers, affiliate marketing, and things like that, which has had a very low ROI at this point in time and is becoming somewhat of a race to zero as it pertains to some of the competitive pressures we're now seeing with traditional finance players moving into the overall exchange business of digital assets and crypto. Having that sort of competitive advantage and moat is somewhat challenging, and deploying resources right now across that strategy is not very fruitful. So I think what they're doing, largely speaking, is both a disciplined approach that speaks to their moves to really stay alive and solvent for the next 6-7 years, however you want to calculate that. But on the flip side, also speaks to probably a large change in strategy and dynamic across the broader crypto industry. It's not as easy as it was to simply hire an influencer or affiliate marketer and go and acquire users for a couple bucks that quickly have a lifetime value of 10 or 100 fold that. times have changed and it's becoming a little bit more tight and more competitive. And I think it speaks to all of that.
All right, that's all for Crypto World.
I mean, they made some good points, right? I don't know, this whole FTX thing, I don't know how crazy it's actually going to be. I don't know if it's going to, I mean, I put a poll in the chat. I want to know what you guys think. Is it all FUD, or are we going to be seeing a, I don't know, we're just going to see nothing. Like, who knows? Who knows, right? I don't think that it's going to pull back super hard if it does pull back. I personally think that BlackRock and all those big guys that are applying for the ETFs are going to be scooping that shit right up as soon as it starts dipping. You know, that's what smart money does. As soon as the people are selling and getting nervous, or in this case, you know, the exchange FTX would be selling the 100 million. It's kind of a drop in the bucket at the same time as it's a lot of money, but I don't think it's going to affect us too much, to be honest. That's just me. But anyways, the halving is coming. Exactly. Yeah. So that's just how I feel about it. I don't think it's going to be too detrimental to the space. I mean, we might see a pullback to 20K, but who knows? All right, let's get into this. So I'm really hoping, I don't know, this guy is smoking a lot of hopium. This dude right here, I don't even know his name. But anyways, yeah, he says Bitcoin will hit $1 million soon, $10 million in 10 years. You guys think that's even possible? I don't know if it is. I don't think so, but we'll see. We'll find out. Let's do it. This is Altcoin Daily, guys. Link is in the description if you guys are interested in going to check out this full video without me. Let's do it.
The upside of the next cycle, I think, is tremendous. We haven't had like this structural setup like this going into any other cycle before. I mean, the Bitcoin ETF, especially when it's led by someone like BlackRock, you're talking in the multi-trillions of AUM. And it's not that they're just expecting people to buy the ETF just straight up. They're going to be bundling that ETF into all sorts of structured products that they're offering to their clients, that they're recommending to people as just basic investment theses, etc. So BlackRock ETF is one of these moments where all of a sudden Bitcoin starts to get embedded into the legacy financial system in a way that we've never seen before.
So for the record, this Brandon Green guy, yes, he's super optimistic on the price of Bitcoin. Some of the things he says are a little out of the, you know, left field, but what he just stated there, I don't think that's invalid at all.
Brandon Green with us today of Bitcoin Magazine and Bitcoin Conference. He's head of the events, Bitcoin Amsterdam, coming up October 12th and 13th. Use code Altcoin Daily, 10% off. Brandon, thank you for being here. You famously think that Bitcoin will hit 10 million to 100 million in the next 10 years in the long term, 1 million in the short term. Explain your Bitcoin investment thesis.
He like aged like 20 years with these glasses right here. I don't know what it is. It makes him look wicked old.
Yeah, so, you know, I caused a lot of buzz on the last show about kind of getting into some moon math numbers. So 2033, I would say the top could be somewhere in the 10 to really $100 million range per Bitcoin. At that point, could you be a millionaire holding 0.01 BTC? I think it's totally possible. You know, I would not be surprised.
0.1 BTC?
0.01 BTC.
Holy hell. And the price, the actual prediction of the price you said was 10 million possibly?
Yeah, I think it could go as high as 100 million in one of these bull runs. Totally possible. Like, I think it's important, you know, when you hit some of those really large numbers to take into account that, you know, there's a debasement of the underlying currency that's really fueling a lot of that run. So, you know, it's not just that you're going to get $100 million and it's worth $100 million like today, but, you know, it is, I still think, going to ultimately capture a much larger kind of set of the overall economic activity. And so the value of that Bitcoin, you know, will be much greater even in real terms than it is today. So, you know, if you're looking at really what's kind of driving the bullishness right now, I mean, obviously we're exiting the bear market. It's been a brutal one. We've seen a lot of carnage. There's a lot of kind of dead bodies of companies and, you know, people who weren't the best actors who are kind of floating past. And that's good. It's a cleaning out of the industry, right? There are some majorly bullish underlying sort of themes that are occurring right now. The Bitcoin ETF is one. I'm sure you guys have hammered it quite a bit on the show, but I think it's hard to really quantify just the impact that that'll have, especially when it's led by someone like BlackRock. I mean, you're talking in the multi-trillions of AUM
He's not wrong,
that these
man.
guys have. And it's not that they're just expecting people to buy the ETF just straight up. They're going to be bundling that ETF into all sorts of structured products that they're offering to their clients, that they're recommending to people as just basic investment theses, etc. So BlackRock ETF is one of these, not a black swan by any stretch, it's very foreseeable, but it's one of these moments where all of a sudden Bitcoin starts to get embedded into the financial, legacy financial system in a way that we've never seen before. This is going to be like a pre-ETF, post-ETF, how we measure time. That's just one thing that's happening right now. Another thing that's I think continuing to impress me, or I see, continuing to continue is companies owning Bitcoin. So FASB, the accounting standards, right? They have been incredibly difficult to work with if you're a public company trying to own Bitcoin. And the reason is the way that they kind of classify Bitcoin as an asset is that you're not allowed to recognize the gain on Bitcoin until you sell. So anyone who is a company that owns Bitcoin as a public company right now, whatever they bought at, that's what they have to keep the price of Bitcoin on their balance sheet as. And the only way they can recognize any sort of gain is if they actually sell it, which is super stupid. It doesn't make any sense. But it's a big reason why a lot of companies are just saying, all right, we're not going to hold it right now. It's just going to complicate our accounting and make it difficult to really showcase our financials to the public. So that getting changed is a huge driver of an entire other swath of investors into Bitcoin, which is companies who are just looking to protect dollar exposure risk, right? And even more than that. So another thing to continue to watch is, the growing geopolitical instability, the challenge from kind of the BRICS nations, and what that does to countries caught in between. Right. So it's not like everyone's going to want to pick one side or the other of kind of some sort of brewing conflict between the US and China. Most countries are going to want to be able to trade and be friends with and have treaties with both sides. So what do you do from a treasury management perspective of a country when your basic kind of treasury asset for the longest time has been US treasuries? But now you have direct conflict between kind of the US government and China. You're going to be looking for a provably neutral treasury asset that you can hold, and you don't have to kind of worry about that getting debased or any sort of changing components of that asset just based on kind of the short-term needs of one of these countries. And so obviously there's gold, but now there's Bitcoin. And I think that Bitcoin is going to play a huge role in any sort of multipolarity that comes into like the geopolitical landscape. So I'm rambling a little bit, but those are three major kind of themes that I see emerging that are just going to continue to grow, especially as we enter this new epoch. Obviously the Bitcoin halving coming next year, that's going to start the next cycle. And, the upside of the next cycle, I think, is tremendous. We haven't had like this structural setup like this going into any other cycle before. I mean, it's crazy. It's nuts.
Interesting. So if I'm hearing you correctly, Bitcoin gets to $1 million through BlackRock ETFs, other ETFs, company treasuries, a continuation of what MicroStrategy and Tesla did. Also, the next coming Bitcoin halving. And then Bitcoin gets to 10 million to 100 million with, the next 60 plus Bitcoin halvings, the US dollar getting debased, and also kind of like the reserve currency status of the dollar getting upended.
Yeah, and it's not even necessarily the reserve currency status of the dollar. Like, I think that there's a world in which there's three currencies. There's the dollar, there's the yuan, and there's Bitcoin. And, people are going to want to use Bitcoin for no other reason than they don't want to pick sides in a growing conflict. And I think that the addressable market of that use case is huge. I mean, it's basically the entire world outside of the US and China, or, any of the specific allies who are going to find themselves on one side or the other of the conflict. I'm not saying it's going to be a war or anything like that, but the economic kind of turmoil is already beginning with the Russia kind of situation. I think it's just going to continue to be a theme for the next decade plus. So I don't think it's necessarily 60 halvings from now that you see some crazy movement in the Bitcoin price towards some of that higher range of what Bitcoin could ultimately be. I think it could come very soon in a matter of 10 years, 20 years, et cetera. But it's not going to happen in a vacuum. It's not like Bitcoin is going to continue to grow at the same pace it has without there being some structural shifts in the way that the world works. And that's a good thing.
That's
you know,
true.
it's a good thing for Bitcoin. It's why people adopt Bitcoin is no one's forced to, right? They choose it because it has competitive properties that lead people to want to buy it. And I think that those competitive properties are just going to continue to shine.
Now, what do you guys think? Do you guys think this guy's actually smoking a lot of hopium in the morning like Patrick Murphy in the chat, or do you think he's actually legit? I mean, I think he makes a lot of good points, to be honest. The whole Bitcoin ETF thing, BlackRock getting involved, I think it's a lot bigger than a lot of people think. Like, a lot of people just think it's, oh, okay, another big guy's coming in. No, like, this dude, like, well, not this dude, but this company runs shit around here. You know what I mean? In America. Let's put it that way. It's going to be a big deal. As soon as that's approved, I think it's going to be a big deal, personally. You guys let me know what you think.
So you're still sticking to your thought that Bitcoin hits 10 million to 100 million by 2033?
Sure, why not? I mean, I could totally see it. Again, like there would be some sort of fundamental shift in the underlying currency that measures that number, right? But I think it's totally possible. You know, another quick thing that I've been thinking about on the ETF side of things. So,
you know, real quick, I just want to ask you guys, if Bitcoin ever got to that point where it was $100 million, right, or even just $1 million, what would you do with it? Would you sell it and take the profits and put them into something else? I can tell you right now, I would buy real estate with it 100%. I would end up selling out of Bitcoin, wait for another drop, and then, you know, I'd buy into real estate or hold the money on the sidelines to buy again after it runs up. But I don't know. What would you guys do with the money if it actually hit, you know, some absurd amount of money where you end up selling your Bitcoin? What would you do with it?
So a lot of people are talking about Bitcoin ETF. You know, people with a brokerage can buy Bitcoin, yada, yada, yada. You know, there's going to be a fork of what Bitcoin looks like. There will be legacy financial system approved Bitcoin, right? And then there's going to be pirate Bitcoin. So let's take the pirate Bitcoin out of this, right? These are the people who are going to continue to transact on chain. They're the real, you know, they own their keys, all that kind of stuff, right? Exactly. You like the pirate Bitcoin, right? But there's also going to be this kosher Bitcoin type thing. And what's interesting about this, and why there may even be people like you and me who ultimately use some amount of this kind of approved Bitcoin, is an ETF share that you would own, a Bitcoin ETF share. It'll represent, because it's redeemable, you know, 1-to-1 the underlying Bitcoin. Maybe there'd be some sort of premium or discount based on, you know, the fluctuations of the day and custodial risk and whatever else gets priced into it, but pretty close. But for the first time ever, you would have kind of much higher up the Cantillon ladder access to credit. You would be able to collateralize your shares of a Bitcoin ETF instead of having to sell. And you can use the money from that to speculate further on the price and, you know, lever up on Bitcoin if you wanted to go that route, or simply just, you know, use the asset to fund your daily life and your daily needs and, you know, have cash that doesn't require you to sell any Bitcoin. And, you know, the difference between now and what that world looks like is right now, you know, we've just gone through the absolute washing out of any sort of lender in the space, right? And there's plenty of reasons why that occurred. But one of the reasons is that the cost of capital in the Bitcoin and crypto space is incredibly high. And so having the high cost of capital mixed with the volatile asset, mixed with the keen sense of wanting to get returns on the lending side, it was probably like not a sustainable system in the first place, right? But when you go much higher up on that Cantillon ladder and you get to, you know, the BlackRocks of the world, who are basically, you know, right next to the money printers, their cost of capital is much lower. So their ability to lend against, you know, collateralized shares, you're going to get an interest rate that's a ton lower, like a lot lower. And the counterparty risk is going to be much simpler because it's basically, you know, kind of backstopped by the Fed to some extent. So I see that as like another huge trend, that you're going to basically unlock a ton of liquidity for Bitcoin without having to negatively impact the price as people are kind of using Bitcoin in their day-to-day lives. So just another theme that, you know, I've been thinking about that I think enough people aren't talking about.
So that, you know, there's some people saying that the BlackRock ETF, it's good, but, you know, it's just one thing. You are here to say that a BlackRock ETF would be a very big deal for the industry.
Very big deal for the industry, for sure. I mean, there's just no two ways about it. Now, it'll come with downsides, right? Like It'll mean that Bitcoin gets put through the political washing machine that,
It's already
just
there.
hits everything that possibly runs through our financial system. And it's going to be ugly. It's going to be messy. There's going to be tons of downsides. But again, that's also why I would draw the distinction between kind of that Bitcoin and pirate Bitcoin. The ultimate honey badger doesn't care, right? It's Bitcoin, TikTok next block. It's not going to be affected by it. So, users will be fine, but watching kind of our existing institutional apparatuses try and digest what Bitcoin means to everything is going to be a messy process. And BlackRock will be kind of the catalyst for a lot of that carnage to come. And I'm sure there's going to be tons of onerous regulations. I'm sure there's going to be tons of casting Bitcoin in a terrible light, saying that, any bad thing that you can possibly say about Bitcoin will be said. But in the end, Bitcoin will survive and everything else will, go away. So, it'll just be a ride.
Guys, if you think Brandon's bullish, smash the like button, share this video with a friend. I mean, I'm sure you're curious to hear what your friends think about, Brandon's thoughts on Bitcoin. And I want to remind
Just wants everybody to shit on him in the comments. That's all.
everybody that Brandon is here to promote Bitcoin Amsterdam coming up October.
No one cares about Bitcoin Amsterdam. Skip ahead. Let's go to this.
Besides a BlackRock ETF this coming cycle, what else are you looking forward to?
Yeah, so we talked about the FASB accounting. We talked about kind of nation state adoption. I would say another big thing is just well, have you paid attention to this Javier Milei guy in Argentina?
Not sure.
So I'm not gonna come out here and say he's definitely gonna become the next president of Argentina, but yeah, he won the primary as a libertarian candidate, and his platform was to shut down the central bank of Argentina. And now, he says it from the standpoint of dollarize and just use the US dollar, but it's the sentiment leads him to Bitcoin, and he very much loves Bitcoin, and he's talked about it many times. And so I see Argentina as one of these countries. I think I saw a recent stat that Argentina has already surpassed El Salvador in terms of Bitcoin adoption by its citizens. And so, I see just the global South, a lot more of those instances cropping up, tons of user adoption occurring, that's not even top down, just people choosing to use Bitcoin in their daily lives. And yeah, I think by the end of this next epoch, there will be 1 billion Bitcoiners on the planet. 1 billion with a B. That's my bold prediction for this epoch.
And that's not even enough for everybody to hold one full Bitcoin.
I love it. Yeah, a continuation of what El Salvador did, different countries, Venezuela. That'd be awesome. I think it's going to happen. My final question, Brandon, is advice to somebody getting into the space now, today. Maybe they've dabbled in crypto a little bit before, but like somebody who wants to really like go harder into Bitcoin and crypto, somebody coming in fresh, what advice would you give a new person? Just
sell your house and just sell everything. Children, everything. Buy Bitcoin. Just kidding. No, 1 in 7 people. Yeah, if 1 billion people own Bitcoin, yeah, 1 in 7 people on the planet will own a portion of Bitcoin, which is a pretty good statistic, actually.
Yeah, there's a ton of advice to give. Number one, and obviously I'm talking my book, but go to a conference, meet people, connect with the industry. If you're trying to truly get into Bitcoin, then you're not going to experience it on Twitter. Like you're not going to, it's not the real experience. Once you meet people face to face, you learn about Bitcoin through, interacting with people. It's just a different level of kind of engaging with Bitcoin. Secondly, I would say consume a lot of educational material. Altcoin Daily, great show. Continue to, watch and listen and learn about everything that's going on in the Bitcoin space, because it's changing all the time. Bitcoin Magazine, of course, we also write a lot about it. We do some videos as well, so feel free to check us out. And then the last thing I would say is tinker, right? Don't just, absorb the information and then move on, right? If there's something interesting that's come out, if you've read a lot about Lightning, go get a Lightning wallet, throw some sats in there, play around with it, send them around to your friends, build a website, enact some Bitcoin payments on the website, see what happens. it is not a museum piece. Bitcoin is not a museum piece.
I don't think I agree with that. I don't think you should be practicing sending Bitcoin around. If you're going to practice sending, buy a shitcoin and send that to your friends.
Is a technology that you can use every day. And so you should be using it every day, and you should feel comfortable using it every day, because it'll ultimately underpin, the future of your everyday life. And the more comfortable with it you get now, the asymmetric upside you will have in terms of opportunities as it's time to onboard the rest of the world.
Oh yeah, and one more thing. I've had some Bitcoin-centric people on here over the past year, and it depends who, but like some people say that there's a growing token economy coming for Bitcoin, whether with drive chains, whether with ordinals, many different things. Is that something you're excited about, not excited about, neutral about? What's your take?
Yeah, so I would say that I'm neutral about it, and I'm not riding necessarily the hype train, because I haven't seen the use cases yet that really speak to me, and I think like, oh yes, I will use this kind of in my day-to-day life outside of just speculating. That being said, I think that there are a couple reasons that those use cases haven't cropped up. Number one is that there's some regulatory difficulties with it, right? So everyone likes to talk about like tokens and are they securities, right? Well, the reason why that's such a big question is because you're not allowed to create any sort of token that promises an increase in the value of that token, or that can do dividends of cash flows of whatever project it represents, or can establish like clear governance, right? And so because of those things, it's really hard to make a token worth anything. And so I think most of them aren't, right? But in a world in which some of those restrictions relax, or there's some sort of carve out for digital assets in that respect, then yeah, I think that there's actual use cases that can be built out into that economy. And so then the question becomes, all right, well, what's that built on, right? And I'm a Bitcoin maximalist, right? Like I think that Bitcoin has unique properties that make it the best blockchain to use for any sort of payments, but also for kind of a data infrastructure as well. And so, if you want that sort of robust, unfuckwithable, right, data structure, then you should not be using anything other than Bitcoin in my mind. And so that means that there needs to be the tooling available so that when these use cases really do become possible, that people aren't forced to use some other layer one that has trade-offs, right? So that's kind of my opinion. It's not something I think about a ton, but I do think that the incorrect kind of move on the part of Bitcoin is to completely eschew any future possibility that these use cases will become valuable for Bitcoin.
Excellent. You keep things real. That's why we love having you on. Brandon, thank you so much for coming on. Final thoughts for the Altcoin Daily audience, either about yourself, the conference, Bitcoin, anything you like.
Yeah, I hope I see you in Amsterdam. I know I'll see you, Aaron.
I really don't want to talk about Bitcoin Amsterdam anymore. All right, let's move on. So anyways, I do think that overall, again, like I said, BlackRock is going to be a huge catalyst when it comes to Bitcoin and its price discovery and everybody getting into it and all this other shit. It's going to be big. It's going to be big. Dollar cost average if you guys can. $10 a week. Put it in there. You know what I mean? You're not going to miss it. And you know what's funny? I actually listened to something earlier, and Da Vinci said this. I don't know if you guys like that guy. He's a little out in left field, but he's smart. He bought Bitcoin when, we all should have. And he said, he was like, buy Bitcoin instead of a lottery ticket, because if you do that, right, and you said you just put it aside, regardless if it goes to zero or not, 90% of the time you play Mega Millions or something, it's going to zero anyways. So it's like, what's the difference if you just buy Bitcoin and you put it off to the side? It's the same difference. You know what I mean? If you didn't hit the lottery, you know what I mean? It's you're gonna be throwing the ticket away anyways. So it's a good thing to think about. I was like, oh, it actually makes a really good point. But all right, let's get into this. Mr. Coin Bureau, or guy over at Coin Bureau, says central banks think this about crypto. This is the report that I was talking about earlier. It's 20 minutes long. I'm gonna I might have to speed this up, but we'll see. So let's get into this, guys. If you have any questions, ask in the chat.
Crypto adoption is increasing, and it's safe to say that the central banks don't like that fact. Recently, the so-called Bank for Central Banks published a report claiming that crypto adoption causes financial instability in developing countries, which is, of course, where adoption is happening the most. The report included input from the central banks of the United States, Mexico, Brazil, and a few other major Latin American countries. Their concerns about crypto adoption paint a surprisingly bullish picture. That's why today we're going to summarize this report, explain the significance of what's being said, and tell you what it could mean for the crypto market. This is one you do not want to miss.
I don't
always
listen to Guy, but when I do, it's at 1.5 times. Yeah, he does kind of talk slow. What I'll do is put it to 125. If it's too fast, let me know.
Summarizing today is titled, quote, Financial Stability Risks from Crypto Assets in Emerging Market Economies. It was published by the Bank for International Settlements, or BIS, late last month. Note that the BIS has the moniker of the Bank for Central Banks, as I mentioned a few moments ago. Now, the report begins with a foreword which basically says everything I said in the introduction. It analyzes the adoption of crypto in developing countries, includes recommendations on how to keep crypto under control, and was written by the aforementioned central banks, the US, Mexico, Brazil, and others. The only thing that really caught my eye was that it seemed to claim that crypto adoption in developing countries is high because these countries generally have low financial literacy. This is in stark contrast to a recent study by a US university which found that crypto adoption actually increases financial literacy.
You know what? I'm going to put that back. I feel like he's talking a little too fast. If you guys want me to speed it back up, let me know.
This makes sense considering that you kind of must understand crypto before you truly adopt it. Anyways, the more you know. Now, the first section of the report provides a short summary of the key findings. A few things caught my eye here. For starters, the authors seem to be hyper-focused on the rise and fall of the crypto market.
Rude puts, thank you for the
Eagle,
249.
Smeagol, let's talk about BTC Amsterdam, Netherlands, Rainbow, Mushroom, Swag.
Thank you for the 249 super chat, buddy. Appreciate you.
They don't seem to care about why people are adopting crypto, but simultaneously acknowledge the reasons why. For example, quote, proponents of crypto assets claim that they offer lower transaction costs, faster payments, no intermediation, anonymity, and potentially high returns on investment. Whether they deliver on these claims is another matter. Now, that second part is surprising. They refuse to argue against it. Moreover, quote, for some users, crypto assets provide an alternative to limited investments and savings instruments, while for others they offer a seemingly safe haven against volatile domestic currencies. Now, this conflicts with what the authors implied in the foreword. They know those adopting crypto are informed. In other words, they know exactly why people in developing countries are adopting crypto, because their fiat currencies suck. Instead of addressing these
100%.
shortcomings, the authors essentially conclude that something must be done to keep crypto under control because of supposed financial stability risks. The authors then highlight a number of risks in particular. Market risks due to volatility, liquidity risks due to a lack of transparency, credit risk due to a lack of governance, aka control, operational risk due to cyber attacks, currency substitution risks, and capital flow risks due to crypto's use in cross-border payments. The irony is that many assets are more volatile than crypto. The existing financial system is even less transparent than the crypto industry. TradFi has exponentially more credit risk than DeFi, and cryptos are more resilient to cyber attacks because they're more exposed. They are being tested literally every day. This just underscores the fact that the only risks the authors are actually concerned about are currency substitution and capital flows. To address these risks, quote, authorities can consider selective bans, containment, and regulation. A classic starting point for these BIS reports. Note that you can find our summary of another crazy BIS report using the link in the description. Now, the actual report begins with an introduction wherein the authors explain what cryptos are and how they work. They then divide crypto into two categories for the purpose of their analysis: stablecoins and unbacked crypto assets, which means everything else, Bitcoin, Ethereum, etc., etc. For context, central banks hate stablecoins, probably because they're direct competitors to central bank digital currencies, or CBDCs. What's interesting is that governments seem to like stablecoins because they're backed by government debt. This means they can use stablecoins to subsidize their spending. Anyhow, the authors go on to explain that this report builds on recent work by the Financial Stability Board, or FSB, a sort of subsidiary of the BIS. If you've watched any of our videos about the FSB, you'll know that its crypto recommendations become regulations in its member countries, namely the G20. The work the BIS is building on is a crypto framework put together by the FSB, which can be seen in this image here. Now, this image is ironic because it notes that stability risks only flow from crypto to TradFi. As we've seen with the banking crisis, the stability risks seem to be coming from TradFi, not crypto. Before breaking down the risks crypto allegedly poses to TradFi, the authors make another eye-opening claim. Quote, "The crypto universe was built on the promise of an efficient, decentralized, low-cost, inclusive, safe, and open monetary system. But structural vulnerabilities in the design and operation of crypto asset markets make them unsuitable as the basis for a monetary system." Now, the key word here is monetary. The central banks oversee the monetary side of the financial system. In practical terms, this means raising or lowering interest rates through various mechanisms to affect the amount of currency in circulation. It's clear that they do not want to lose control of this ability. Now, you'll recall that the first crypto risk is market risk. A few things worth noting here. First, the authors seem to imply that publicly traded crypto companies are inherently risky. They also take issue with the fact that some cryptos are held mostly by a handful of wallets. They provide some fascinating statistics to back up their claims. Quote, "In 2020, an estimated 10,000 individuals owned about a quarter of all outstanding Bitcoin. Satoshi Nakamoto, the anonymous creator of Bitcoin, is the largest
I love how they always show this guy and they don't even know if that's really him.
holder with more than 1 million stored in different wallets, around 5% of the total. Other tokens show similar concentration. For example, fewer than 100 participants control over 51% of the value in Dogecoin, Zcash, and Ethereum Classic. So, at first glance, these statistics are concerning, but it's easy to forget that there's even more extreme wealth concentration in other asset classes. Case in point, the top 1% reportedly earned more than the rest of the world combined over the last 2 years. Why isn't the BIS raising this point? Now, the second thing worth noting is that most of the author's concerns around market stability appear to be directed to stablecoins, which should come as no surprise given what I mentioned earlier about them being competitors to CBDCs. What is surprising is that the authors also target spot Bitcoin ETFs. Quote, "Bitcoin ETFs could potentially pose market risk in EMEs by lowering the barriers to entry for less sophisticated investors and increasing investors' direct and indirect exposure to crypto assets." Oddly enough, the authors are concerned about the wealth concentration Bitcoin ETFs could cause. Here are a few more statistics. Quote, "As of end March 2023, ETFs owned a combined 819,125 BTC, 3.9% of the total Bitcoins to be issued, 21 million. The largest Bitcoin ETF is Grayscale Bitcoin Trust, GBTC, which owns 643,572 BTC, or nearly 3% of the total supply. In total, ETFs, governments, and public and private companies own more than 1.6 million BTC, approximately 7.8% of the total.
Dude, look at MicroStrategy. Has 152,000 Bitcoin. Value today, $3 billion. That's crazy.
Supply.
Almost full.
On that note, you should check out our recent video about the US government selling its BTC holdings.
This is the only thing I hate about Guy. It's like every other sentence he says, he's like, "Oh, check out this video in the description below."
That will
every
be down
time.
in the
I
description.
mean, I get it, but...
Now, the second crypto risk is liquidity risk. The authors start by noting that most of crypto's trading volume takes place on offshore exchanges, such as Binance.
Holy shit. Binance is that much further ahead than Coinbase? That's crazy. Wow. Look at that. That's 5 billion. Coinbase is only 624 million. I mean, I guess, I don't know. Yeah, I guess it's more diversified, right? It's all other countries and stuff. That's just crazy. That's a gigantic amount more.
What's odd is that they include Huobi as one of the top crypto exchanges and as a potential point of concern when it's no longer that large. Oddities aside, the authors also take aim at Tether and allege that its USDT stablecoin is still insufficiently backed. It seems they missed the memo that USDT is now backed almost entirely by US government debt, like all the other major stablecoins. Seems that the BIS is making arguments using outdated data. Anywho, there's something else that the authors point out which is actually quite important, and it's that money market funds were a major source of market instability in 2008 and in 2020. For those unfamiliar, money market funds are kind of like TradFi stablecoins, the difference being that you earn a yield on them. Naturally, the authors note that stablecoins are similar, and that if they were to experience a run, this could create problems for the assets that back these stablecoins, namely government debt. The thing is that most money market funds are significantly bigger than most stablecoins, and therefore riskier. In any case, the third crypto risk is credit risk. The authors define credit risk in the context of crypto as, quote, the potential that a counterparty in crypto asset markets or directly exposed to crypto assets could fail to meet its obligations in accordance with agreed terms. Areas of concern include interconnectedness between crypto companies, citing FTX and Alameda, lack of governance and disclosures, citing DAOs, leverage, citing DeFi, and even crypto exchanges having access to bank accounts, citing Chilean authorities who forced banks to bank crypto exchanges. Speaking of which, crypto companies and projects in pro-crypto jurisdictions are still having a hard time opening bank accounts, despite favorable crypto regulations. This is likely due to the Financial Action Task Force, or FATF, but it seems that this pressure could be coming from the central banks, at least in part. Regardless, the fourth crypto risk is operational risk. The authors take issue with the fact that cryptos use blockchains because, quote, one of the key features of blockchain technology is its irreversibility. Once a transaction is recorded on the blockchain, it cannot be undone. This feature can be problematic in situations where transactions need to be reversed, such as in the case of a hack or fraud. Newsflash, but if crypto transactions could be reversed, then there would be no point to having crypto because it could be manipulated by governments, central banks, and Wall Street, just like they do with money and other assets. In case it wasn't clear enough, they want to be able to do this with crypto too. Now, the fifth crypto risk is bank disintermediation risk. This includes both currency substitution and reserve currency substitution, which you'll remember are very big concerns for the central banks. Lo and behold, the authors admit that crypto could, quote, reduce the monetary authority's control over liquidity in the economy, thus weakening the effectiveness of monetary policy. The authors reiterate the reasons why people would opt to substitute their fiat currencies with crypto. You'll remember these reasons included not trusting the fiat currency, crypto being more efficient than fiat, and crypto being more private than fiat, which actually isn't accurate, at least in the case of cash. The reserve currency substitution section is where things get seriously bullish for crypto. Listen to this. Quote, if crypto assets become mainstream, they could also replace the global reserve currency as a perceived store of value. The report denotes this substitution process as cryptoization 2.0. Put simply, the authors are speculating about the possibility that crypto could compete with reserve currencies like the US dollar if they see enough adoption. The caveat is that they're saying this in the context of developing countries where they think crypto will be used to evade capital controls.
All right. He's mentioning another video. I'm gonna call this. If you guys want to continue to watch this, again, I will leave a link to this in the live chat for you guys. I do have it in the description below as well. But yeah, this guy, I'm falling asleep. You guys, we don't need this shit on a Friday. But anyways, it's I mean, it's neat to see where everybody's head's at when it comes to the banking and all that shit. But at the end of the day, just take it with a grain of salt for now until things get passed, right? The ETF is going to be the biggest catalyst here. We all know that. I mean, at least I know that. I don't know if you guys know that, but it's just one of those things that we need to pay attention to where things are going. The big money investors, as soon as they come in, it's gonna get wild. Banks will follow because they have to. They don't have a choice, right? But anyways, yeah. Do we have any questions before we get out of here? Because it is Friday and I do have to get to daddy duty, and the wife has to get to work. So let me know if you guys have any questions. We'll be jetting out of here if you don't have anything. Off to the coal mine. Fudweiser, have a good day, buddy. Andrew Masad says agreed. Appreciate you, buddy. Let me see if there's anything in the chat that I missed. Let's see. Scrolling through. Somebody asked for us to check the core wallet of GPRX. It's a Ghost Rider algorithm. Is it a new coin? Let me see. Let me see. Mining pool stats. God, they need a dark mode for this. I apologize. Oh wait, that was it. That was new coins. That was a new coin list. Is it one of these? What was it again? Let me see. GPRX. What's it called? What's it called? Mr. Tashara? I don't know if I said your name right. They have smart nodes too. Interesting. Is it one of these coins? Or no? Because I don't know what that abbreviation's for. This is RTC. I'm just trying to see what new coins are out. Man. Proof of work blocks. XPB. Ethash. I wonder what this is. Neat. So this is a good place to come for new mineable coins if you guys are interested. Miningpoolstats.stream/new coins is a good place to look. Geez, there is a big list. Wow. So typically within 90 days this list gets it gets cut off, right? So the 3-month mark, these coins shouldn't even be here, but everything above this typically is on here. Like I said, 90 days is usually the cutoff for this list, but these are also very sketchy and most of them are going to be rug pulls. Just fair warning. Gain Pro X, is it on this list? Ah, this one. Ah, okay. All right, I will, you know what, actually, Yeti.uk, do me a favor. So this is the audit site that my man Yeti does. He just checks out the wallets and makes sure that they're safe for you guys. So this one, like the ones that say failed, obviously be careful. This was failed before and soon as was fixed right after we called them out. But yeah, you guys got to just check through these coins, and if you want the suggestions over here in other, you guys can suggest a coin or whatever to be searched, I guess. So I'm gonna put this in the chat. Actually, if you want, I will let him know about that, but if you could fill out one of those suggestions for him to know, and that way, like, he's, you know, aware of it, and I'll have him look at it, because yeah, it's definitely important to make sure you guys are all safe. I don't want to see anybody get screwed. But yeah, Nick K, what's up, buddy? All right, we're just about to get out of here, guys. Hit that like button on the way out. I appreciate you guys hanging out with me on this Friday. Hopefully you guys have a great happy payday and it doesn't last too long over there at work, and you guys get out shortly. All right, I will catch you guys soon. Have a good day. I'll be back bright and early tomorrow morning, and the wife finally showed up. Better late than never. We'll see you guys later. Peace out.